Sean McCracken from Hotel News Now here with Greg Kennealey. Hopefully pronounced that correctly, although I feel like with a name like Sean McCracken I should be able to pronounce an Irish last name, but
all good.
So I just want to get a sense from you. We're a couple years into Mission Hill as an entity, correct?
Yes.
So what's it been like growing the business, especially in the environment that we're in right now? Obviously an acquisition vehicle, but deals are a little hard to come by right now. So what's it been like kind of ramping up?
Yeah, thanks for having me. So Mission Hill acquired its first hotel in March of 2021, so we're a little over 2 years old.
Mm-hmm.
At this point, we own 27 hotels and are likely to be at just north of 30 towards the middle of the summer, end of the summer. So it's been quite the journey. Starting something from scratch has been a lot of work. It's been incredibly gratifying. The partnership with KSL Capital, stating the obvious, has been incredible and a huge factor in our early success. The world has changed a lot. You recall that when we were getting started, we're sort of coming out of COVID. Now we're dealing with lots of other macroeconomic challenges. So finding deals today and continuing our growth trajectory has been difficult, but we're finding a way to do it. So I'm very proud of that.
So what's the difference between doing a deal today versus a couple years ago when you guys really kicked this off?
Quite a bit is different. I mean, it's probably equally as challenging, but for very different reasons, right?
Mm-hmm.
So in late 2020 and through most of 2021, the underwriting unknown was, the COVID recovery. Is that going to happen? At what pace? Is leisure coming back? And then is leisure overshooting and the champagne effect, and it's going to retract? So you were trying to figure out the demand side of the equation without the benefit of recent history of how does the world recover from a pandemic, right? Now we are spending as much time looking for hotels as we are looking for debt.
Yeah.
Right? Finding debt capital has been incredibly difficult. I think the number of assets on the market that are attractive to us is relatively limited. So many of the deals we're finding have been off market that are sort of relationship driven. So it's been challenging in those ways. The impact of higher interest rates obviously makes the cost of acquisition more difficult, but its impact on the economic trajectory going forward is also something we're trying to get our arms around. Right? Yeah. There's not a lot of certainty there, and so underwriting in this new world is more challenging, right? Because you're likely to be fairly pessimistic about growth trajectory. You've got higher interest rate costs. In many markets, taxes and insurance are going up, labor's going up, right? So there's a lot of pressure on the cost side. So you've really got to find assets where there's value creation that makes you optimistic that you can get to the return levels we need to.
Yeah, I mean, I'd imagine though, to a certain degree, those cost pressures kind of prove out the thesis you guys had initially, right? Because you're looking for assets that are not the most costly to operate to begin with, right?
Correct. One of the many attractive aspects of the select service sector is it's a relatively high margin business. And so while we feel labor pressure like every other hotel, its impact on our P&L percentage wise is far less than it would be if we ran a massive group box like the one we're sitting in.
Yes. And yeah, for context, sitting in the Marriott Marquis in Times Square, which is just, I think, so emblematic of this type of hotel. Like, it's like a battleship,
For sure.
It is a very different beast. So I wonder though, because the space you're in, it seems like there's so much heat behind it. And obviously within the last couple of weeks, we got Hilton, Hyatt, and Marriott all launching, mid-scale extended stay brands. Do you think, is that evidence that you're in the right sector, or is it, how do you digest that when you're thinking about this as the space you want to play in?
Yeah, so I guess a couple things come to mind. I mean, from the perspective of the large brand conglomerates, pushing down into mid-scale and then specifically mid-scale extended stay is a fairly logical growth path for them. As an existing franchisee of select service assets, I don't love it because it's just yet another brand on the website that someone can choose to stay at relative to my hotel in a given market. But I think from their perspective, that makes sense. We have made the conscious choice to stay at the premium end of select service. And so the hotels that are launching into that space are not direct competitors for us.
Yeah.
So, yeah.
So how do you mentioned, it being a little bit harder to get deals done, or not harder, but different difficulties in getting deals done.
For sure.
How do you source deals? How do you get them done now? Like what are the secret tricks to getting debt financing now? Like what do you do to like get a deal past the finish line right now?
I'm not sure we have any secret tricks, and if we did, I don't know if I'd broadcast them. But honestly, the biggest factor for us is the team. We've been very fortunate to put together a very high caliber team, and one of the other factors I think that's different is there are a number of other private equity groups that look at select service as part of a much broader set of things that they invest in, whether they're a travel and leisure focused or they're hotel focused or they're real estate focused. And they, as a result of that, their strategy may have them in select service for a while, then out, and then onto other things. And they're looking at it through more of a macro lens. We are select service sort of 24/7, 365, and that is our entire focus. And I think as a result of that, we find opportunities that other groups don't. I think we benefit from relationships where we might be the first or second phone call from someone who's considering selling. And as a result of that, as I mentioned, most of the deals we're going to do in the first half of 2023, we're sourced directly by our team members. So that feels really good.
Yeah.
I guess the other factor is, we are also looking at not every hotel that we buy, but for many of the hotels we buy, we see value creation opportunities, whether it's renovations, repositionings, brand changes, in certain cases, expansions or repositioning of certain parts of the real estate that frankly make other buyers uncomfortable. But just sort of given my background, our team's background, and certainly, our partnership with KSL, that's very much in the wheelhouse. And so I think that enables us to go after certain deals that others wouldn't.
Yeah, I was going to ask you. I mean, obviously, your background is, in asset management. That's that's still how you view the world.
Very, very much so. Yeah, I definitely enjoy, perhaps more than some of my team would like. Kind of getting under the hood and playing with the hotels and looking at the art of the possible. That's a really fun part of the job for me.
Yeah, it's probably true though. Every hotel asset manager I deal with, obviously all very smart people, but not I don't envy the people who have to answer to them because a very demanding breed of human being, I feel like.
It certainly can be. And from philosophically, our view is that the asset management function is to benefit from your vantage point, right? You're seeing multiple brands, you're seeing multiple operators, you're seeing lots of assets. Some we buy, some we don't. And your job is to assimilate all that information into best practices, or what we would call a playbook, and then bring that back to the property teams in a collaborative, respectful way. So that ideally sort of two heads are better than one, or 1 + 1 makes 3, whatever you want to call it. There are certainly some people in the asset management profession who just kind of come in and ask tough questions and bark orders. And look, anyone can put someone else back on their heels. That's not really the focus. The focus is to try and bring those best practices to the hotel teams in a respectful way that reflects how much we appreciate all their hard work, and just kind of working together to make it even better.
I want to clarify. I know plenty of asset managers are wonderful people. I'm not saying you're all.
I know you're not. I know you're not.
But it is part of the job where you can never be satisfied with good enough, right? Like that's what it feels like it comes down to.
Yeah, and I guess I would reframe that to say that hotels are living, breathing things in a lot of ways.
Yeah.
And markets change, and so you have to be responsive to that. And you don't sit back and rest on your laurels, right? There's always other ways you can elevate service, elevate the product, elevate the amenities. And so we're always looking for those. I think in a constructive and sort of naturally evolving way, but yeah, we're not going to. There's no point at which you say we're done.
Yeah,
right. It's never. Sure. It sort of never ends.
Yeah. So what opportunities are you seeing long term? Like what gets you excited about the place you guys are playing in?
We're on one hand very proud of how far we've come in such a short period of time, but I very much feel like we're still in the first inning of what Mission Hill hospitality can be.
Yeah, for sure.
We are we are really fortunate to have gotten a high caliber team together early in our growth, and that team is really gelled, and we are now the theme for us in 2023 is systemization. So right, we're buying hotels that are largely similar to one another. We're asset managing hotels that are largely similar to one another. We're doing the accounting for them, the legal for them, et cetera. And so we're getting smarter and smarter and more efficient about how to do things. And I think that makes us more effective and hopefully will translate through to the returns we're able to generate. We see lots of opportunity for growth ahead, despite the headwinds that we're facing at the moment, because we're going to be select service investors for the long term. We have the benefit of looking at everything through that longer term lens. And so we see a great path for growth. We see a great path to get, even deeper and better partnerships with the management companies we work with to maximize the value of those hotels. We're developing lender relationships, like all these things that are happening that I think are benefiting us today, but will really benefit us, sort of down the road.
Yeah. And it's, kind of a testament of what you guys have done already, that so young in your growth here, that so many of the deals you're doing are relationship based.
It is. That's entirely a function of the team, and in certain cases, the KSL capital connection.
Mm-hmm. Which obviously is hugely helpful for getting a company off the ground. Like the backing of KSL is probably pretty big.
Absolutely critical. Yeah, they were an instrumental part of our early success and in every aspect of the success we've had up to today.
Mm-hmm. Mm-hmm. So, you kind of hinted at it, but what are your short-term expectations? Like, what do you think for the rest of the year into next year? Do you think that we're teetering on the edge of recession? Do you think that there will be any sort of demand downturn in the near term?
I do, but my opinion is formed from reading and listening to folks who are far more informed than I, economists and such. We all consume those types of news outlets. So yeah, it certainly feels like we're heading in that direction. I'm, like everybody else, sort of fingers crossed that it's mild and short. Mm-hmm. But again, so on one hand, we are preparing for that outcome, right? From an asset management perspective, from a cost mitigation perspective, if we see demand starting to slip, we're prepared to try and mitigate on the cost side, to try and maintain the profitability or minimize the profitability decrease that we see across our hotels. But again, with that long-term perspective that I mentioned earlier, two other things come to mind. One is, if you zoom out a little bit, the trajectory of our industry is incredibly strong and resilient, right? And so, I'm very confident that if we have a recession, and regardless of its severity, that our industry will bounce back quickly and bounce back, with enthusiasm and vigor. Yeah. And so we have the benefit of flexing our investment horizon on any given hotel to kind of maximize, exit value, which means we can hold longer if we need to. And on the growth side, periods of economic distress tend to create acquisition opportunities. Mm-hmm. So when things get tough, the acquisition team gets excited, the asset management team has to work harder, but it's just part of the trade-off.
Yeah, for sure. Has the experience of the last few years really changed how you guys would approach cost cutting in a recessionary environment? I bring that up because, hear from a lot of people that traditionally if things go down, you let people go out of necessity, protect the bottom line. But some people are a little less willing to let people go just because of the lessons we learned about, how much you lose out when you don't have that human capital. Has your approach mentally thinking about what you would do in the worst case changed at all?
That's an insightful question. I would say yes. Recognizing that during the depths of COVID, I had a different role, right?
Yeah,
I was in my role at KSL Capital, but there was no playbook for how to navigate a global pandemic, right?
Yeah, yeah.
So it was obviously very, very difficult from a business perspective, obviously tragic from a human perspective, but necessity is the mother of invention, and we learned how to operate everything with a far smaller and lower cost structure. But we also learned, or I guess for us philosophically, we're validated that culture matters, how you treat people matter, and what we find in certain cases we had no choice but to reduce staffing, but I think we did it in a way that tried to help those people with those transitions. And as a result, we are finding that across many of our hotels that we now have, because of the operating partners who had the same philosophy, that the groups that treated people great, had good cultures before COVID.
Yeah.
Surprisingly, in quotes, had far less trouble recruiting those people back, right? And so, culture matters, reputation matters, and the organizations that really embody that, Davidson Hospitality Group being a great example of this, staffed back up the fastest and got out of the gates quicker, and as a result had greater economic upside.
Yeah, I remember talking to Tom at Davidson about that exactly, and him saying that they kept everybody at corporate for that exact reason, just because they knew there's going to be the other light at the end of the tunnel eventually.
It was a very bold move under his and John Belden's leadership, which paid off enormously for the employees, for their owners who were their clients, and then from Davidson from a growth perspective as well.
Mm-hmm. So shifting gears a little bit, but still kind of attached to kind of this lessons learned from the past few years. But do you think we've reached an equilibrium point on kind of the cost cutting needed, especially in the select service space, and being able to service, guests' desires and demands? Obviously, like, there was kind of a decoupling of, guest service scores and profitability or so.
Yes.
Like, do you think we're still trying to figure out what the right levels are there?
Yes, I do. I think our industry as a whole, in certain cases, can't decide what they want.
Yeah.
Right. And so it's helpful to the profitability of a hotel to have relaxed standards around housekeeping as an obvious example, and the frequency of that. On the other hand, certain hotels will start to elevate service and amenity levels the moment they see that it creates an economic return for them relative to the rate they can charge. And so you just have to decide where you want to play. But it's and there's a constant feedback loop with the major brands on that topic as well, right? But I think there's been some progress made there in terms of certain brand standards or costs that really didn't create value for the guest. And so it allowed us to have the conversation, do we really need to do X? Because the guest doesn't care and we don't want it. And then brands became more flexible. And I'm hopeful that they will remember that and use that lens as they look at what things come back and when. But I think we're at a pretty good spot there. There's always room for improvement, but it's not a major focus for us.
Yeah. I mean, it feels like the asset managers of the world were fighting that fight for years and years and years ahead of the pandemic. And finally, this was like, proof is in the pudding, right?
Correct. Yeah, and I think that at the end of the day, guests vote with their feet and with their wallet.
Yeah.
And now they vote on TripAdvisor too.
Yeah.
And so there's no need to wonder, right, or to hypothesize. I mean, the data speaks for itself, and if people look at it through that lens, I think they'll make the right choices.
Anything else you want to talk about, Greg? We're actually way ahead of schedule on this. You got about 20 minutes before you got to get ready.
But if there's something else on your mind, I'm happy to address it, but not specifically.
No, this has been a wonderful conversation. I really appreciate you taking the time. This has been great.
Oh, you're most welcome. Thanks for having me.
Thanks.